Now let's move on to step number two of 10 steps to financial freedom. Eliminate bad debt and learn to leverage smart debt. Not all debt is bad. The key to financial freedom isn't it a zero debt? It's knowing which debt drains you and which debt grows you. So in this step, we'll focus on two things. Kill bad debt that eats away your wealth. And second, leverage good debt that builds assets and income. Bad debt is anything that loses value or charges high interest. Examples will be credit card with interest rates of 20 to 30%, payday loans, personal loans for consumption, that is vacations, electronics, etc., and auto loans beyond your means. And what is the modern strategy to eliminate bad debt? List all debts and sort by interest rate. That's the first one. Focus on paying off the highest interest rate first. That's a debt avalanche method. And if you have a credit score allows, consolidate it into a lower interest loan or 0% balance transfer card. Use side income, bonuses, or tax refunds to wipe out higher interest balance early. In our modern strategy to eliminate bad debt, the example is if you have a 5,000 in credit card debt at 22% interest, paying 250 month will take you 25 months and cost $5,933. Instead, if you pay $500 a month, you will clear it in just 11 months and save $933 in interest. We talked about bad debt and some of the strategies to eliminate them. The step number two and the 10 steps to financial freedom. Let's talk about good debt. Good debt is any debt that creates value or income. Examples is first is real estate loans. Real estate loans are that build equity or rental income. So the money is coming to you. Second is student loan that enhance future earning potential and then that's a within reason. Third is business loans that generates long-term cash flow. And fourth is margin loans or low interest credit that is used to strategic investing only within the discipline. Again, rule of thumb is if the return on what you are buying exceeds the cost of debt and it builds long-term value, then it's a good debt. Once your bad debt is gone and your money isn't leaking away in interest, the next step is to build your safety net, not by saving aimlessly, but by building a smart emergency fund that still works for you.